Hey guys, Austin and Jonathan here
What's up?
with your next weekly whiteboard. And today we're asking the question, to escrow or not to escrow? That is the question.
Somebody read his Shakespeare in high school, I think.
I tried.
So we want to talk about whether you should escrow or you shouldn't. But before we do that, what is escrow? So when you buy a house and get a mortgage, you have your principal and interest payments, your mortgage you have to make every month, but you also have two other bills annually. You have your property taxes and your homeowner's insurance. And so when you get a mortgage, you have the option to pay that monthly or pay that annually. And so when you pay that monthly, you're setting up an escrow and you're allowing the mortgage servicer to collect monthly payments from you, and they're going to pay the insurance and they're going to pay the property taxes on your behalf annually. And so when you make a mortgage payment, you get your principal and interest of your loan, and then you also have the taxes and insurance associated with your escrow. So that's what an escrow account is. But anyway, Austin, cool thing, when you get a mortgage, there's options. So how do we determine if you should set up an escrow or not set up an escrow?
Yeah, so there's a couple of things that we have to look at, and we're going to walk through those. The first thing is equity. How much down payment are you putting on the house really makes the first call for us. So what most loan programs are looking at is they're looking at the 20% threshold. So the question is, are you putting less than 20% down or more than 20% down? If you're putting less than 20% down, then you're going to be escrowing, regardless of which loan program we're looking at, unless we've got a second lien or something else in there. So for the most part, if you're doing less than 20%, you're going to plan on escrowing. If you're doing more than 20%, you've got the option to waive. So we'll come into whether or not you should later on, but out of the gate, the big question is, are you putting 20% down or not? 20%, kind of that magic threshold to give us the option whether or not we want it.
Gotcha. So less than 20% down, you're going to have to escrow. More than 20%, then you can decide.
Yep, exactly. The next thing is the 100-year flood. So this kind of popped up after Hurricane Harvey, which most Houstonians are unfortunately familiar with. If you're in the 100-year flood zone, your flood insurance is going to be required, period. You want to get that anyways, but it's going to be required, and it's also going to be required to be escrowed. Even if you've got more than 20% down, this is something you don't have the option to waive. So regardless, if you did a 50% down payment and you're waiving escrows, you're still going to have to escrow your flood insurance if you're in the 100-year floodplain.
Gotcha. So you can decide not to escrow your homeowner's insurance and not escrow your property tax, but you will have to escrow your flood insurance.
Yeah, if you're in the 100-year.
If you're in the 100-year.
Yep, exactly. And then the other thing, so once we get through that, that tells us our options, right? So if you're putting less than 20% down, you got to do it. If you're in the 100-year floodplain, you got to do it, at least the flood insurance part. But when it comes to your income, let's assume for a second that this is what we're looking at. You've put more than 20% down and you're trying to figure out, should I do this? What we're looking at here is your income stable or is it lumpy? Feels like a British word, lumpy.
Yeah.
So if your income is stable, you want to keep most of your expenses stable. And so our recommendation is, even if you're doing more than 20% down, you probably want to lean toward setting up an escrow account. If your income is more volatile, like you've got big bonuses throughout the year or your commission base, then you want to keep your expenses as low as possible, sock away when you've got those big windfall months, and then be in a position to comfortably pay those large annual taxes and annual insurance bills when they come due. So that's kind of how we figure out whether or not you need to escrow, is really what's the situation and then what's your income.
Gotcha. So that's kind of how we go through this with each of our borrowers whenever it comes up. Should I escrow or should I not? We're looking at your compensation, how often you're paid, your equity down payment, and obviously there's a new piece of the flood insurance. So we just want to drop a quick video. We go through this every borrower we work with, about escrowing and not escrowing, and just wanted to drop this video so you guys are informed and can share this knowledge. So like it, comment, and share, and see you guys later.
Woo! Adios. To escrow or not to escrow? That is the question.
Before we get into it, let's talk about what is escrow. Oh gosh, what the heck, man?